If you've been paying attention to crypto over the last few years, you'll know that tokenization has become the buzzword of choice. Everyone from BlackRock to tiny DeFi startups is talking about it. Tokenization is the idea that real-world assets, stocks, bonds, real estate, even fine art, can be represented as tokens on a blockchain. And while the word gets thrown around in headlines like candy, very few people are asking the more important question. Which blockchains are actually being built to carry this weight? Here's the thing. Tokenization isn't about hype. It's not about NFTs of cartoon monkeys or flipping JPGs for profit. Tokenization is about taking the biggest, most valuable, and most boring financial markets in the world, trillions of dollars worth of bonds, stocks, real estate, and making them easier to trade, easier to settle, and easier to access. If crypto was the Wild West for the last decade, tokenization is Wall Street and Main Street meeting on the blockchain. And when you look at that kind of financial plumbing, not every chain is built to handle it. That's where Stellar comes in. Stellar's been around since 2014, and it's often seen as the quieter sibling compared to flashier chains like Ethereum or Solana. But what Stellar has that others often lack is a laser focus, payments, compliance, and real-world utility. From day one, Stellar was designed to move value across borders cheaply and quickly. It wasn't trying to become a playground for speculative trading or meme coin gambling. It wanted to be financial infrastructure. And in 2025, that vision aligns almost perfectly with what tokenization requires. Think about it. If you're Franklin Templeton, the $1.5 trillion asset manager already issuing a tokenized money market fund on Stellar, you don't want your product sitting on a chain clogged with speculation and $20 gas fees. You want a chain that regulators can understand, that institutions can trust, and that scales without sacrificing compliance. Stellar checks those boxes. It's fast, it's cheap, and it has built its reputation not on hype but on being useful. And here's the kicker. Tokenization is no longer a theoretical future. It's already happening. In 2023 and 2024, we saw the first wave of serious institutional pilots. Franklin Templeton expanded its Stellar-based tokenized fund. Real estate developers began experimenting with tokenizing property ownership to allow fractional investing. Fintech startups began exploring how to issue tokenized private company shares using Stellar's rails. These weren't headline-grabbing gimmicks, they were test runs of a financial future where blockchain is the back office, not the front-page news. So why does Stellar matter in this? Because tokenization is not about speculation. It's about trust and efficiency. And Stellar has spent the last decade earning that trust by being the chain that NGOs, fintechs, and even government pilots actually use. It's built its brand around being boringly reliable. That's exactly what you want if you're moving billions in tokenized bonds or real estate. The big vision here is staggering. Analysts at Citi and BCG have estimated that the tokenized asset market could be worth anywhere between $4 trillion and $16 trillion by the end of the decade. Even if you assume the lower end, that's one of the biggest financial shifts of our lifetimes. If just a fraction of that ends up on Stellar, we're talking about a scale of adoption that dwarfs the hype cycles of meme coins and speculative trading. But let's slow down for a second. Tokenization isn't just about big numbers. It's about what it means for people. Imagine you're a retail investor who wants exposure to U.S. Treasury bonds but doesn't have the means or access to buy them traditionally. With tokenization, you could own a fraction of a bond directly in your wallet, with lower fees and near-instant settlement. Or picture a young professional in an emerging market who wants to invest in U.S. stocks but is locked out due to local restrictions. Tokenized equities on Stellar could open those doors. Or think about real estate, normally the playground of the wealthy. With tokenization, a $500 investment could give you fractional ownership in a commercial property in New York, Dubai, or Lagos. That's the promise. Tokenization democratizes access to wealth. It takes illiquid, exclusive assets and makes them liquid and inclusive. And Stellar, by design, is positioned as the plumbing that makes this possible without drawing too much attention to itself. The people buying tokenized assets don't need to know what Stellar is. They just need to know the system works. And here's something that sets Stellar apart. Its commitment to compliance. If you want to issue tokenized stocks or bonds, you need to satisfy regulators. That means KYC, AML, and proper reporting. Stellar has leaned into that reality rather than fighting it. While some blockchains push a narrative of total decentralization and anonymity, Stellar has built bridges with institutions, embraced regulated stablecoins like USDC and PYUSD, and joined associations like ERC3643 that focus on compliant tokenized securities. That makes it a comfortable home for institutions exploring tokenization in 2025. So when we talk about Stellar and the tokenized future, we're not talking about hype. We're talking about infrastructure. Stellar isn't trying to be the star of the show. It's trying to be the stage the show is built on. And if you zoom out to the big picture, the stage is about to get very crowded. Trillions of dollars in assets are moving toward tokenization, and the winners will be the blockchains that can quietly handle that volume with trust and reliability. For retail investors looking at Stellar today, that can feel frustrating. The price of XLM might not reflect this massive vision yet. But remember, the same was true for internet infrastructure companies in the 1990s. The companies laying fiber optics or building server hardware weren't the sexy dot-coms that got all the attention. But 20 years later, those were the companies that survived and powered the digital world we live in today. Stellar is playing a similar game. It's not here for the quick pump. It's here to be the invisible backbone of tokenized finance. The big vision is this: Stellar as the quiet layer of trust that allows the tokenization of everything from stocks to real estate. A world where you don't even think about Stellar, you just know your tokenized asset moves quickly, cheaply, and compliantly. A world where the barriers to investing in global assets shrink, and the old walls of financial exclusivity start to come down. That's the tokenized future we're moving into, and Stellar is quietly putting itself right at the center of it. Let's face it, talk is cheap. Tokenization has been a buzzword in crypto for years, and plenty of projects have promised the world without delivering much beyond white papers and flashy partnerships. Stellar is different. By 2025, it has receipts, tangible use cases, institutional adoption, and actual assets moving on-chain. Let's unpack some of the biggest ones. Franklin Templeton's tokenized money market fund. We've got to start here because this is arguably the crown jewel in Stellar's tokenization playbook. Back in 2021, Franklin Templeton, one of the world's largest asset managers with over $1.5 trillion in assets, launched its on-chain U.S. government money fund. At the time, it was a bold experiment. Could you actually run a regulated mutual fund on blockchain rails? Fast forward to 2023, and Franklin Templeton expanded this fund onto Stellar. That was huge. Why Stellar? Because Franklin didn't want an ecosystem plagued by high gas fees or a regulatory gray zone. They wanted a chain that could handle microtransactions, offer predictable costs, and appeal to institutions. Stellar checked those boxes. By 2025, the Franklin Templeton on-chain fund has grown significantly, with billions of dollars in assets under management and daily transactions flowing seamlessly across Stellar's network. For institutional investors, the fund represents safety and compliance. For Stellar, it represents validation. A household name in global finance choosing Stellar as the base layer for tokenized securities. This one example alone proves tokenization on Stellar isn't theoretical, it's live, it's regulated, and it's scaling. Real estate tokenization pilots. Now let's talk property. Real estate has always been one of the most tantalizing targets for tokenization. Why? Because it's valuable, it's illiquid, and it's locked behind massive barriers to entry. Unless you're wealthy, you're not buying an office building in New York or a luxury condo in London. Tokenization changes that. In 2024, several real estate firms launched pilot projects to tokenize property ownership using Stellar. These weren't flashy NFT projects but actual fractionalized property offerings. Investors could buy tokens representing a share of rental income or property appreciation. Some of these pilots happened in the US, while others popped up in Latin America, where demand for more accessible real estate investment is massive. By 2025, we're seeing early-stage platforms built on Stellar that allow retail investors to own slivers of commercial property portfolios. The user experience is designed so that the investor never needs to think about blockchain. They just see a dashboard showing their holdings and dividends. Behind the scenes, though, Stellar is the trust layer ensuring those tokens are authentic, tradable, and compliant. This is where Stellar's invisibility really shines. Most users won't even know the word Stellar. But every token they hold, every transaction they make, is powered by its rails. Tokenized private equity and startup shares. Another fascinating case study is private company shares. Historically, investing in startups or pre-IPO companies has been limited to venture capital firms and accredited investors. Ordinary people are locked out until the IPO, and even then, liquidity is limited. But in 2025, we're seeing fintech startups experimenting with issuing tokenized private shares on Stellar. These platforms let employees or early backers tokenize equity, creating a secondary market where shares can be bought or sold. Suddenly, startup employees who would normally sit on illiquid stock options for years can sell a fraction of their stake early, providing liquidity and flexibility. For investors, it opens a new frontier of access. For Stellar, it's yet another proof point. It can handle not just payments but securities that demand regulatory oversight and transparent settlement. Stablecoins as the bridge. We can't talk about tokenization without talking about stablecoins, because they're the grease that keeps the whole machine running. And Stellar has positioned itself as one of the best stablecoin networks in the world. Circle's USDC has been on Stellar since 2021, and it's a core component of tokenized asset settlement. PayPal's PYUSD joined Stellar in 2024, bringing one of the biggest names in fintech into the ecosystem. When Franklin Templeton, a real estate firm, or a fintech startup wants to tokenize assets, they need settlement currency. Stablecoins on Stellar serve that role seamlessly. Every trade, every dividend payout, every fractional purchase can be settled in digital dollars instantly. That's a critical piece of why Stellar is winning tokenization pilots. It has the stablecoin infrastructure already built in. NGO and social impact projects. Here's an angle that doesn't get enough attention. Tokenization isn't just for billion-dollar asset managers. NGOs and social enterprises are also exploring tokenization on Stellar to unlock funding and distribution. Take microfinance, for example. NGOs can issue tokenized debt instruments representing loans to small business owners in emerging markets. Global investors can buy these tokens, funding local entrepreneurs while earning a return. Stellar's low fees make this practical, even for tiny loan sizes. Another example is carbon credits. By 2025, several environmental organizations are experimenting with issuing tokenized carbon credits on Stellar. Instead of opaque markets full of middlemen, these credits can be tracked transparently, bought easily, and retired automatically when used. Tokenization here isn't just a financial efficiency. It's a way to bring integrity to a market that's been riddled with fraud. Each of these real-world examples, Franklin Templeton's fund, tokenized real estate, private equity, stablecoins, NGO pilots, points to the same conclusion. Stellar is already the invisible infrastructure of tokenization. These aren't pie-in-the-sky dreams or someday maybe projects. They're happening right now in 2025 with real institutions, real money, and real users. And what's fascinating is that, in most cases, the users don't even know they're on Stellar. Franklin Templeton's clients aren't logging into a Stellar wallet. They're logging into their brokerage interface. Real estate investors aren't memorizing private keys. They're clicking buy on a mobile app. NGO beneficiaries aren't learning about consensus protocols. They're receiving funding instantly. That invisibility is Stellar's strength. It doesn't need the spotlight to win. It just needs to keep embedding itself into the financial pipes that move trillions. By now, it should be clear that tokenization isn't just a buzzword for Stellar. It's a business strategy. The network's low fees, compliance focus, and proven track record with institutions make it a natural fit for asset tokenization. And while competitors like Ethereum, Polygon, and Avalanche are also vying for this market, Stellar's quiet, infrastructure-first approach gives it a unique lane. If tokenization is going to reshape financial markets, it won't happen in loud, speculative bursts. It'll happen gradually, invisibly, through pilots that scale into trillion-dollar markets. Stellar isn't asking you to notice. It's asking institutions to trust. And in 2025, that trust is translating into real-world adoption. When people talk about the tokenized asset revolution, it often sounds abstract, like some far-off dream. But by 2025, it's not just a possibility. It's becoming reality. The global financial markets are already experimenting with tokenization, and credible institutions are placing big bets. Let's put some numbers on it because this is where the conversation gets real. According to major research reports from Boston Consulting Group, Citi, and HSBC, the tokenized asset market could reach $10 to $16 trillion by 2030. Some bullish forecasts even stretch as high as $30 trillion if adoption accelerates across bonds, equities, real estate, and alternative assets. To put that in perspective, $16 trillion is roughly the size of the entire US GDP today. That's the scale we're talking about. Now, not all of that flows through Stellar, of course. Ethereum has a head start, and newer L1s like Avalanche and Polygon are trying to position themselves as tokenization hubs. But here's the nuance. Institutions care about stability, predictability, and compliance. That's where Stellar shines. Stellar isn't trying to be the everything chain. It's carving a specific lane, regulated tokenized assets and payments infrastructure. By focusing on being the invisible layer that institutions can rely on, Stellar positions itself as the blockchain equivalent of financial plumbing. You don't see the pipes, but everything depends on them working. So what's a realistic market share for Stellar? If tokenized assets hit $16 trillion by 2030, and Stellar manages to capture just 2 to 5%, that's $320 billion to $800 billion of value flowing through its rails. Even a sliver of this market would dwarf today's entire crypto industry outside of Bitcoin and Ethereum. Consider the precedents. Franklin Templeton choosing Stellar for its on-chain mutual fund. Circle and PayPal deploying stablecoins on Stellar as settlement tools. Real estate tokenization pilots running on Stellar's rails. These aren't experiments in a vacuum, they're test cases for exactly the kind of trillion-dollar market tokenization represents. Another factor in Stellar's favor is cost efficiency. Ethereum might be the first stop for tokenization pilots, but when institutions scale, fees matter. A network that can settle millions of tokenized trades at fractions of a cent per transaction becomes the natural choice for global markets. The network effect is also critical. Once institutions deploy one product on Stellar and it works, they're more likely to expand additional offerings. Franklin Templeton may start with a money market fund but could add bond ETFs. A real estate platform may tokenize one property, then entire portfolios. Each success compounds Stellar's credibility. Bottom line, the tokenized asset market is enormous, potentially the largest financial opportunity blockchain has ever faced. Stellar doesn't need to win it all. It just needs to remain the quiet infrastructure partner institutions trust. If it captures even a fraction of the market, XLM's role in the ecosystem, and by extension its long-term value, could be transformative. Every revolution sounds clean and inevitable until you look closer at the friction points. And tokenization on Stellar is no different. For all the optimism about turning trillions in real-world assets into on-chain tokens, there are some tough challenges and risks that could slow things down, or even derail adoption if not addressed properly. The first and biggest challenge is regulation. Institutions don't move billions without legal clarity. Every jurisdiction, whether it's the US, the EU, or markets in Asia, is wrestling with how to classify tokenized assets. Are they securities, commodities, something else? Inconsistent rules create hesitation. Stellar can't solve regulation alone, but its focus on compliance and partnerships with regulated entities, like Franklin Templeton and Circle, shows it's playing the long game. Next comes liquidity. It's one thing to tokenize a bond or a piece of real estate. It's another to make sure there are buyers and sellers ready to trade it. Without enough liquidity, tokenized markets risk looking like ghost towns. Assets may exist on-chain, but they don't move. Stellar's challenge is to build network effects strong enough that once institutions start tokenizing, real liquidity forms. Then there's interoperability. The reality is that no single blockchain will dominate tokenization. Ethereum, Polygon, Avalanche, Stellar, and private ledgers will all play roles. That means assets will need to move seamlessly across ecosystems. If Stellar can integrate smoothly with these other networks, it strengthens its role. If it becomes too siloed, it risks being sidelined as just a niche player. Another risk is institutional trust. Stellar's brand has always been tied to being a mission-driven blockchain for payments and inclusion. But institutions don't just care about mission, they care about uptime, scalability, and predictability. If Stellar experiences major network issues, or if competitors offer more robust infrastructure, adoption could stall. Protocol 23's improvements were a step forward, but the pressure to keep scaling without breaking only grows. And finally, we can't ignore public perception. Tokenization may sound efficient, but to everyday users, it can feel abstract or even risky. Convincing people that owning a tokenized share of a fund or a building is safe, reliable, and beneficial will take time. Stellar and its partners will need not just technology but storytelling to win hearts and minds. So yes, the opportunity is massive, but the path isn't frictionless. Stellar must continue threading the needle, staying compliant without becoming too rigid, scaling without sacrificing security, and integrating into the wider tokenized ecosystem without losing its identity. If it manages that balance, its role in tokenization could be cemented. If not, it risks being remembered as a blockchain that was early, but not the one that scaled the future. The story of tokenization is still being written, but one thing is clear. Stellar has carved out a unique role in the narrative. It's not competing to be the loudest or flashiest chain. It's quietly becoming the infrastructure layer trusted by institutions who want real-world assets on-chain without the chaos. From Franklin Templeton's mutual funds to early real estate pilots, Stellar has proven that tokenization isn't theory anymore, it's happening right now. The challenges ahead, regulation, liquidity, interoperability are real. But the fact that Stellar is even in this conversation with giants like Ethereum and private enterprise blockchains shows just how far it's come. If the tokenized asset market really grows into the multi-trillion-dollar industry analysts predict, Stellar doesn't need to dominate. It just needs to keep being reliable, compliant, and cost-efficient. Even a slice of that pie would be transformational. So the question isn't whether tokenization will happen, it's which blockchains will be there when it does at scale. Stellar has positioned itself as one of them. If you've been following along, hit subscribe, drop a comment, and let's keep tracking how Stellar is turning tokenization from a buzzword into the backbone of tomorrow's financial markets.